Hi, welcome to the Market Alert for Thursday the 8th of October 2015. And starting off in the daily chart, just changing things up a bit, instead of having a look at what happened yesterday, let's have a look at the bigger picture. It's probably a good way to actually start the Market Alert, so you've got a good idea of what's happening in the background of the market before you actually trade it. So here we've got the market trading up yesterday to that 16,938, which I warned about yesterday, and then we see the market move lower during this session, only to come back a bit later on as the plunge protection team came in and brought the market back to the upside. We can see at the moment that on the overnight the market's down, even though the Chinese are back from their 7-day holes, and their market is currently up. So this shows that there's definitely some weakness around if the Dow isn't actually following the Chinese market at the moment. So what we've got here is a market that's gone up on low volume. This is called levitation, and any sort of potential weakness coming into the market will see the market drop sharply, and we saw this yesterday when the market traded up to the 16,938. As a lot of commentators have noted, and it's a really good analogy actually, the market goes up in steps like a staircase, but it comes down like an elevator that you can see there. So as the market makes these, climbs the stairs, it drops like an elevator. And this here, you've got the situation where the market's going up on fresh air and it's likely to drop like an elevator, which we saw in a sort of a macro way yesterday, which I'm going to have a look at now. So I've marked on the chart, or transposed across from the daily chart with a horizontal line, the 16,938, and I drew this on so I could have a marker of where what we had on the daily chart, that resistance, would be highlighted in the 5-minute chart. So that's why that sort of green horizontal line is there. So the market traded through this, but the volume was starting to drop off, and then as soon as we get the potential sell signal, and it was very kind to us actually, because we only had a 22-point risk on this as well. Although saying that, I was inclined to move the stop beyond the high just in case it came back a bit. Sometimes you just have to think, well, hang on a minute, this stop's a bit close, it's only 22 points. I would rather have a bigger stop and reduce the bet per point to maintain that sort of 1 to 3% risk, and thereby giving the trade a bit more room to breathe based upon what I can see here, this market moving higher through the 16,950 level, but on low volume, but then it just gives it a bit more breathing room. So the market then starts to move low. There's the order ticket, the trade is then filled, and then we see prices starting to move lower. We see the scalp being hit there, we get the indication of that. And then you'll see I redraw the lines back on so I can see how many points we've got. And because I've got this resistance here now, this is the double top that we've seen in the daily chart, then you're pretty safe with that sort of a move. And let me just drive this across a bit. There we go. So you can see the market continuing down, driving down, then coming back, and then through and down to the 16,800 level, which became the support, and then the market goes just one more burst to the downside and then starts to come back. So a nice run on this trade yesterday, over 100 points on the downside on this particular trade. So a very nice start for the Wednesday session, given that the Chinese market's been closed for the last 7 days and we've not had much volatility, so that's all starting to return again now. This is what we used to, not used to what we saw on Monday and Tuesday where there was little action. This is what we're actually wanting in the trades. So on this particular trade, I'm just going to wind back to here. You'll see me taking profits at this level, and the reason for that is that I had an appointment and had to go out. There you go, you can see there the trade being closed. So 82 points at that point, I was more than happy, and then when I came back I noticed the market had gone down just a bit more. But had I been at the desk, I would have just trailed the stop down above the lower highs, and I'll show you how to do that now in the. So this is the chart after the trade. We see the market driving through the 16,900 level here, and then when the market does that, it's a case of trading. Now you can use either a 50% or 100% extension. You see what the market's doing here is making these what are called lower highs. So each successive high is lower than the previous one until we get to here. So as the market drops through, you can just trail the actual stop 50%. So it'll look like this. I'll take the check mark out there. Let me just remove that one so you can see. So as the market's gone through, we then have a situation. Obviously this one's higher, so it would ignore that, and that one's the same as there. So as it drops down, you can keep trailing. This one's going to be higher, so the next one would be there, and you can see how the market then stops you out just at the 16,800 level. So that's the way you trail it, because the market's moving fast in that direction. You can then just keep locking in the profits as the market moves lower there. So let's have a look at what the market's doing today, see if there's any chance of a sort of pre-market trade. And we'll just clear that up, and then we'll just bring this over. So the market rallied back after the close, the white shaded area. There were no trades last night. The market then trades back, and this morning we've got the market down from 100 points. Between the two red lines is 100 points. So there's some volatility around in this market at the moment, and as the German market comes on stream, then we should see a bit more activity as well. The Chinese market, let's just have a look at this. At the moment it's up 3.28. We'll just refresh this, see what's happening. So what's already interesting here is the Chinese market's actually moving to the upside after their 7-day break, and yet the Dow is moving lower. So there's definite weakness in the US market there. And again, if we just go back to the daily chart just to press the point, we've got that resistance at 16,938 as well, and the market's it's going to create a resistance now for this market to move higher, and then it's a case of taking out these other lows as the market moves lower. What will be interesting is here, this could become a support area at 16,700. So if you're short and the market gets to that area and you see prices failing to move lower, that will be the reason why. And also that 50 bar average area as well will be or could be an issue for the market, and I'll give you the figure on that. That's going to be 16,600, so 100 points lower. Right, let's have a quick look, see if there's any news today. We've got all of the usual MPC stuff coming out of the UK official rates, and that's all at midday, so that won't affect us. And oh, here we go. Right, we've got an interesting evening today. We've got FOMC meeting minutes at 7 PM, so the market could be quiet this afternoon as prices wait to see what Yellen's got to say, and also Carney's speaking at 7 PM as well. So the market's going to go quiet to this point, and then they're also going to wheel out Williams to speak as well at 8:30 PM, which won't affect us, but that 7 PM it could present a problem. And also it looks like we'll probably have more volatility in the pre-market session than in the official session. So again, we're going to have to play this one as we actually see it, but the market's going to be waiting for Yellen at 7 PM, so 6:30 the normal start of the evening session stand aside, because the market will be very quiet waiting to see what she has to say. And then of course Carney's going to be speaking at the same time as well, old Barmy Carney, the man who says he's going to do things and never does a single thing. But that aside, the market will still be waiting to hear what they've got to say. Right, that's it for me. Oh, actually, is an interesting one for you just before we conclude. We've not looked at the volatility for a few days. I didn't want to complicate it for those of you that are new. But those of you that have traded with me for a long time, this is really interesting. We've got a situation here where the implied volatility which is the cost of insurance on options in the market, has dropped like a stone, and that's because the underlying market's moved higher. But this market has come back sufficiently now that we could see a major move to the downside. That's what this is actually indicating. The options are cheap, the froth and the expense has gone out of this market. So again, it's all pointing towards the downside. And also, coming back to Yellen and co., they have a bit of a confidence crisis problem and credibility issue, because people don't believe a word that they actually say now, and especially as they vacillated so much on interest rates. They keep threatening to increase them, but they don't. They know they can't because of the knock-on effect to the bond market. So again, it will be interesting to see what unfolds. But this certainly is signaling that we could see the volatility return to the market, which is great news for us, and also to the downside as well. Right, that's it. I will see you in tomorrow's. Thanks for watching, and as ever, thanks for your support. See you in the next one.